This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices sharply lower this morning. This directly linked to news of the potential for a corporate debt default in Portugal. Also, we have the escalating tensions in the Mideast as a negative influence as well. In the past, though, we have seen various problems in the Eurozone as far as their debt situation, and we have come back and made new historical highs in some of the stock indices with those problems overcome in the past. And I think that will be the situation again this time, that there will not be a long-lasting impact from this Portuguese news. So after a few days of volatility, I think we can see stock index futures resuming the bull market and higher prices are likely. Over in the currencies, the debt default fears in Portugal helping the dollar index to advance. This also helping the yen to firm, with the yen considered to be somewhat of a flight to quality vehicle. Also the yen higher, even though we did have a record drop in Japan's machinery orders in the last reporting period. Some pressure in the pound after UK trade numbers coming in weaker than expected, and also some pressure in the Australian dollar. This after the unemployment rate in Australia increasing by 0.1% to 6%. Longer term, we feel that the dollar index will work lower, and these flight to quality gains that we are seeing are only going to be temporary. Same situation for the yen. The flight to quality gains in the yen will probably not continue, and the British pound will probably advance since the UK economy is the strongest in Europe. Over in the interest rate markets, futures higher across the board as the flight to quality bid continues. We do have the Treasury auctioning $13 billion in 13-year bonds today. So nothing changing in our long-term view in Treasuries. The main trend still appears to be higher. We still feel that the 30-year bonds will be the leader to the upside. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.